All right, so before we get rolling, and again, we have a lot to cover, so I'm going to talk a little faster than I normally do, to be honest with you. But before we get started, if you don't mind, just put where you are tuning in from. So I'm here in the DC area and in DC proper, and we'd love to hear where everyone is tuning in from. So there's a chat button down at the bottom, and you can just kind of open it up and let us know where you are watching this from. Hopefully you're in the right place. So there's a lot of information that I want to cover in this session today. We have an hour slotted, so I'm going to try my best to stay at an hour. But we're going to talk about attracting capital. Okay, what it means to attract capital, why it's important, and to be frank, how it can make you money. Okay, so there are three things we're going to cover. One is finding your ideal investor, and then creating capital raising or capital attracting content, and then attracting capital to close deals. Okay, so we're going to get right into it. And if you see me kind of peeking to the side, it's because I'm looking at the screen that actually has better resolution. So the one in front of me is a wider screen, so I don't want to throw things off here. So my goal today is to show you how to attract capital so that you can scale your portfolio and make more money. Okay, and I'm going to do that in three ways. So number one, I'm going to give you a bit of clarity. So we're going to get clear on who exactly it is that we are trying to attract, because we say capital, but we're really attracting people, right? So we're really putting out a message so that it resonates with someone. So we'll talk a bit about the who, we'll get clear on that. And then we'll talk about strategy. Okay, so after we get clear on who we can serve, we'll figure out how to best serve them. And the technique that we're going to cover today is using social media to do so. And then after that, I'm going to give you a bit of a confidence boost of sorts on how to adequately lead your investor, your ideal investor, through this process that I call the investor readiness journey. Okay, so I'm excited to share this with you. But what's the point? You know, again, learning to attract capital ultimately helps you make money. Okay, in this context, we're talking about real estate investing. But this approach actually has implications in a broad range of strategies. Okay, even if you're looking to acquire businesses and raise capital to do that. Okay, so it ultimately then it's a valuable skill. So those are the three things that I'm going to do for you. But here's what I need from you. Okay, I want you to implement. So I want you to take action on the things that you hear today. You know, there's nothing better than to, you know, put some information, some knowledge out, and then have someone reach back and say, hey, I put that one thing into practice and it moved the needle in my business or in my life. And so I want that for you. Okay, so take action today. I love this quote: a year from now, you'll wish you started today. Okay, there's nothing more truer than that. I can tell you there's some things that I wish I started a year ago. And here I am kicking myself for not taking action on them. So don't be that guy. Don't be me. Okay, make sure that you take action and implement. Okay, so this gentleman here, his name is Robert Kiyosaki. I'm sure many of you are familiar with him, but he is the author of Rich Dad Poor Dad. This is an important quote and an important picture for me. So I actually took this photo at an event where this is just a room full of very, very experienced fund managers, real estate investors. And so it's kind of on this point about taking action, but also getting in the right room so that you take in the right knowledge and information and experience to move the needle in your life and in your business. So just an important photo for me in that quote: your future is created by what you do today, not what you do tomorrow. So I want to make sure that you kind of focus on that as we move forward here. So I hope you have a deal. Okay, so do we have a deal that you will take action on what you learn so that you can benefit your business and build some wealth? Okay, so hopefully that works for you. And if it does, then we can go ahead and move forward. So why should you focus on attracting capital instead of raising capital, right? You know, this thought of being able to put out a message and establish a platform so that people are drawn to you, I think is much more compelling, more powerful. And I'm going to share the reason why I believe so through kind of a story, my own story. So this is my old office. All right. Once upon a time, I was a petroleum engineer, so I worked in oil and gas. And this is actually the platform that I worked on some years ago. But they would fly me out onto the helideck that you see there. So I would fly out on a helicopter, or depending on the conditions, I would take a boat to that platform. And I would be there for 2 weeks. Okay. So I would work on that location for 2 weeks, and then I would have 2 weeks off. And sometimes I'd have to go to the office or whatever it is. But the point here is I loved that business. Okay, the oil and gas business, you know, you get to work on high capital projects. You get to work with these large, complex teams, and I really enjoyed it. Okay. But the oil and gas business being what it is, it's tied to a commodity. So when the price drops, then typically personnel and headcount is the first thing to get reduced. Okay. So years down the line in my career, I got laid off. Okay. And but the one thing that kept me afloat, and more than just afloat, was actually the income, the passive income coming in from the deals that I owned and that I invested in passively. So getting laid off sucks, but passive income does not suck. Okay. And this might be a news flash for some of you, but the reality is we're all in the real estate game. So whether you are a renter, an owner, a landlord, it doesn't matter. You're in the game. And, my advice to you is to be in the driver's seat, which is to be an investor, to be quite frank. Okay. If you want to be one of the people who has control over kind of the way the ebbs and flows of this market. Okay. Or at least has a stronger position in it. So I had a portfolio of 12 single family properties. Okay. And rentals. And I would kind of buy them, fix them up, rent them out, refinance, and do it again. But I wanted to scale up. So it was born out of necessity, but I actually had a passion for real estate. And I knew I wanted to scale up, but I discovered three things because I started to put in offers on apartment deals, 20 unit deals, 10, 15 unit properties, and they all fell through. So I realized three things. Number one, I needed to expand my knowledge because there was kind of this gap between where I was and where I wanted to be. And I think that I know that it was impacting how I analyzed the deals. The second thing I realized was I needed to expand my network because at the time I felt like, hey, I wear all the hats on the single family side. And I wrongfully thought that I needed to wear all the hats on the apartment side. And I was wrong. Lastly, I discovered that I couldn't do it alone. Okay. So in a few instances, the gap between having the property and not having it was only $100,000 or a couple $100,000 on the purchase price. And had I had the right network, I would have been able to close those deals. So I realized those three things pretty quickly. Most importantly, though, I realized that I was thinking too small. Okay, so I mentioned earlier about getting in the right room. And I realized that I just was not surrounding myself with people who were high performers and who had success at doing the thing that I want to do. And so some of the individuals here in this picture have assets under management worth over $1 billion. So we're talking about getting in the right room and surrounding yourself with the right people. I invested to date, I've invested over $60,000 in mentorship, coaching, these kinds of things so that I can get and around the right people. Okay. People who have had success and experience in doing the things that I want to do. So kind of back to my original point, right? Okay, well, that sounds great, but why should you focus on attracting capital instead of raising capital? And here is the reason why I say that. One of the investors that I met once I got into the right room, he had a team. It was a very small team. It was maybe 3 or 4 of them. And they were able to pull in $16 million in 24 hours for one deal. Okay. And I know because it was a deal that I wanted to invest in passively, but because I didn't pull the trigger fast enough, I was unable to get in. So $16 million in 24 hours, that's something that you simply cannot do unless you attract capital. Okay. Going out and trying to chase capital, you wouldn't be able to get that result. So the light bulb kind of went off, right? And that's when I realized there's a substantial difference between people who raise capital, which really is more of a reactive type of an activity, versus those who attract capital. Okay, so what I'm going to do today on this webinar is to give you a detailed breakdown of the framework that I used to dramatically increase my network of qualified investors. And when I say qualified, I'm really talking about investors who not only can afford to partner with you or be a capital partner in your deals, but also who can do so on a repeated basis. All right, and then I'm also going to give you some details on how to become what I call a capital magnet through value added and targeted content. On this webinar, I'm also going to share some of the strategies that I use to go from that 12 units that I mentioned earlier to over 2,900 units. Okay, so we'll talk in detail about some of the things that I've used to do that, right? I can't give you strategies that someone else has used. I can only give you the things that I personally have done in my business. Okay, so I'm going to share those things with you. Now, I do have a sneaky plan. Okay. I'm going to go pretty in deep in this session here around how to attract capital and some tips and strategies to do so. But I can only cover a little bit in one session like this. So I'm going to have a 3-day seminar where we're going to cover the other elements that are just as crucial in the apartment acquisition process. Okay. And so my sneaky plan is that you would join me during that 3-day seminar, where we're going to go in really deep, and you'll have much, access to more materials that will help you move the needle in your business. And so, so stick around, and you'll hear some details on at the end about that. But that's kind of what my dastardly plan is. All right. So let's step back for a moment. I want to share some details with you about why real estate, right? For many of you, you know why invest in real estate, but I'm just going to do a quick recap. And so I love this acronym, IDEAL. Okay. The first reason, the I, is income, passive income. I talked about that earlier. Okay. It allows you to stop trading time for money, at least the money that you're generating from that passive income source. Okay. A recent survey from Cashflow Portal is basically a company where they have an investor portal both for active and passive investors. But according to a survey from the Cashflow Portal, about 40% of the investors surveyed are looking for passive income and have no interest in being a landlord. Okay, a pretty substantial chunk. But you might be asking, well, where's the rest of them? Okay, so the I is income, the D is depreciation. I know some investors who invest in real estate solely for depreciation. So you can decrease your taxable income base, okay, so that you're saving more money and giving less to Uncle Sam. Okay, the E in ideal is equity buildup, which is one of the best ways to build your net worth. So there's also equity buildup from debt pay down. Okay, and then you have A, appreciation, which is the increase in asset value over time. So I have a couple of slides where I'll talk about the two types of appreciation here in a moment. And then there's leverage, where you can increase the velocity of your capital or the purchasing power of your capital. So these 5 reasons here really summarize the reason why we love investing in real estate and why it's so powerful. Okay. So I mentioned briefly syndication deals earlier, and I'm going to quickly kind of go through what this strategy is. At a glance, a syndication deal is very simply pooling capital to acquire a large asset. Now, when I'm talking about syndication deals, I'm typically looking at kind of the 100 units and north of 100 units or doors, okay, 100 doors or more. There are 2 main parties in the syndication deal. There's the active investor, and then there's the passive investor. The active investor is called the general partner, the GP, sometimes called the operator, the syndicator. The passive investor is called the limited partner, or the LP, sometimes called the equity partner, the capital partner, these things. Okay. So going forward, I'm just going to say GP for active and then LP for passive. Okay. So the GP and the GP team, they do all the legwork. They find the deal, they run the analysis, they secure financing for the deal, they do due diligence. And then once they close, they do all the operations and so forth. Okay. So they do all the legwork. The LP, the passive investor, is a capital partner. So I've been both GP and LP. I'm currently almost exclusively a GP, but I still invest passively as well. And so as an LP, you contribute capital to an opportunity, and then you are given distributions on a quarterly or a monthly basis. And these deals are typically held from 3 to 5 years, at which point there's some lump payout. Okay, so that's kind of the broad overview of what a syndication is and how it's structured. A little more detail on the GP. There are 4 broad phases that they steward. One is the pre-acquisition phase, where they're building their team, they're getting to understand the market and all the players in that market. Then once they find a deal, they move into the acquisition phase, where they meet with the attorneys, CPAs, everyone else, the investors, to make sure and they do the due diligence. They put the property under contract, all these things, make sure that it fits their criteria and their investors' criteria, more importantly. After that, they close on the deal, and then they operate the deal. So at that point, we serve as asset managers. We work with a property manager to make sure that everything runs smoothly, and then we exit the deal. Okay, so that's kind of the broad view of what a GP team does. The LP is the smart partner in the group, okay, because the LP, once you vet the 3 important things that you need to, which is the sponsor, the market, and the deal, the sponsor being the most important. After that, you can kind of go to the beach if you want to, okay, at least with respect to this deal, because it's hands off. All right. And so that's kind of generally how it works for the GP and the LP teams. Now, I'm going to talk quickly about appreciation. And this is what I call the secret sauce of commercial real estate. And it really does kind of have this almost leveraging effect in terms of value that can be extracted from these deals. And this is why a lot of people focus solely on these commercial real estate deals, because the upside is just that significant. Now, I think there's maybe this and maybe one other slide where there is not math, but at least a hint of math. Okay. because that's a conversation for a different session, like deal analysis and these things. But I want to give the outcome of forced appreciation. Okay, the first thing you have to understand is the reason forced appreciation is powerful is because commercial real estate deals, properties are valued based on what's called the NOI approach, or the net operating income approach. Okay, net operating income is very simply income minus expenses. And if you increase the income and or decrease the expenses, you're increasing the net operating income, you're increasing the value of the property. So I'm only going to talk about the outcome of this and why it's powerful. Okay. In this slide here, this shows under certain market conditions, if you have a 100 unit apartment building, okay, and you very simply, I'd say simply, but if you raise the rent on average of those units by $40 a month, then you have added $1 million of value to the asset. Again, I'm not going in this session, I won't go too deep into kind of the numbers, but I just want to explain the power of forced appreciation. Okay, you get this outsized return from the value that you add. Well, the next question is, well, how do you add value, right? And there are 4 key ways to do so. There's either renovations, where you can improve the interior, you can improve the exterior of the property, you can add amenities or upgrade amenities. So you're adding real value here. You can improve management, which typically will decrease the expenses, or just optimize expenses. And then you can do large capital projects. Okay, so these are things where you're adding real value. This is not superficial. You go in, you add actual value, and then it is worth more to a potential tenant. Why now? It's important to have perspective, and we are still very much in a shortage scenario right now, where there's a home shortage, and we're still in the high interest rate environment. And so, right now, in about half of the MSAs in the country, the major MSAs, they're deemed unaffordable for homeowners. Now, on the rental side, there's also a slight affordability crisis depending on where you are located. But there are far more forces that are in support of the rental market, okay, in today. So that's a little bit about kind of the real estate space. I just wanted to give context. The question around what's in it for you, and if you're someone who is looking to raise capital, one of the things, among many others, is that there's typically an acquisition fee assessed when you close a deal, okay? And so if you are a part of a GP team, which if you're someone who brings capital to a deal, then you're going to have to play a substantive role as a general partner. Then you get a piece of the acquisition fee. Okay. And so it's something that is no small feat. The other piece to it is you get outsized returns from the deal relative to an LP. Okay. So the main point that I want to drive home before we kind of dig into the content is that you can do this. This is something that, if you haven't done this before, it does feel a little bit intimidating at first, but I'm going to give you kind of a little bit of a confidence boost real quick. I was reading an article about that Fidelity Investments put out, and it said that 88% of all millionaires are self-made, okay, which is kind of counterintuitive because we all hear that, hey, you have to have money to make money. But here's a data point that says that it's the opposite, okay? It's ingenuity, it's creativity, it's drive that gets it done, okay? And you want some real life examples? Here are a few. Dottie Herman, richest self-made woman in real estate, with a net worth of over $250 million. And she started off, at a very young age, but she started off with as an agent with a brokerage, and she just built her wealth from there. We have Don Peebles. He's close to me here in the DMV area, most successful Black developer in American history. And his net worth is very close to $1 billion. I believe it's higher than 700 now. And then there's the Sobrato family out on the West Coast. Started from nothing. Okay. He started a brokerage in the 70s and helped shape Silicon Valley's commercial landscape. So $5.7 billion coming from nothing. Just sharing this information to say that it's possible. And this guy. All right. So I also came from nothing, but or from very little. And I now have 124 million in assets under management, not net worth, not yet, but in assets under management. Okay. So just, if I can do it, you can do it. All right. So if you're ready to hear kind of the content and understand what it takes to attract capital, then put yes in the chat. All right. I just want to give kind of some context to kind of help you get ready to take in this information. All right. So the 3 keys to finding your perfect investor. Number 1, you have to define who your ideal qualified investor is, your IQI. All right. Number 2, you have to niche down. So you're first going to determine who it is you can serve. After that, you're going to determine who it is you can best serve. So you niche down. And then after that, you understand the desires, the behaviors, the pain points of your potential partners. And I'm going to show you why that's important. But before you do that, there are two barriers that you need to overcome as a individual, something that we all face before we get into this landscape. The first one is that you have to clear this barrier of thinking that you can't raise capital unless you have capital. I just showed you a few slides of individuals who have done it, and also the Fidelity Investments data point. They're saying that people have built wealth without having it before. Okay, so this whole thing about needing money in order to make money is not accurate. You can do it. And also this thought that it's impossible to find capital. So I'm going to dispel that in a moment. But here are some sources of capital. Okay, there are many of them. Private equity, right? Real estate investment clubs, crowdfunding that you can do yourself, crowdfunding platforms, personal savings, self-directed IRAs, or an abandoned 401k. I typically tell people, I tell my clients that you should focus on high net worth individuals. Why? Because they are almost inherently at least qualified. So they at least clear the hurdle of having enough to be able to partner in a deal and to potentially be able to do so on a repeated basis. So going forward, we're going to talk about high net worth individuals or accredited investors. Okay. And according to the SEC, there are just about 24 million US households that qualify as accredited. Okay. So this notion that you can't find capital, it's just not out there, is false. Okay. It's just about catering your message, and it's about finding them in an effective way, but they are there. Okay. That stat surprised me, to be honest with you. I didn't realize there was 24 million US households that qualify, but that's good news for you as a capital raiser. So why is this important? It is because your IQI is closer than you probably think. All right. It just takes a little bit of work to find them. Like I said, to identify them. And there are two steps. The first one is to do a self-assessment. So you really want to understand first who it is that is already in your circle that may or may not qualify as an accredited investor. And I should define that, by the way. Accredited is either a single individual who earns over $200,000 in annual income, or someone who's married where they have a combined income of over $300,000, or it's someone who has a net worth of over $1 million. There are other ways to be classified as accredited, but those are the main three that we typically focus on. Okay. So the first step is to ask yourself these three questions. Who can I help? Right? Who do I know that's in my circle that I can best add value to? And then after that, it's who do I know? And then who knows me? Those last two questions are not exactly the same, because if you're already someone who they know that you are an investor, okay, they may know you, but you may not have facilitated the means for them to reach out to you, and vice versa. Okay, so you have to ask these three questions to yourself so that you get clear on who it is that's in your circle that you can already reach out to, have these conversations with. And then number two, you got to begin to identify your IQI. And here's how we're going to do that. The first thing is psychographics, okay, are much more powerful and impactful than demographics. All right. That's the first thing. That's the golden rule in this. Okay. Because I'm going to tell you why here in a second, but psychographics are just much more powerful. They're a more powerful motivator and indicator to tell you why your ideal investor would take an action or not. Demographics explains who they are, so the statistics behind who they are, but your psychographics are going to explain their motivations and why they invest. And so here's kind of a very broad look at the types of questions that you would see in the demographic versus a psychographic study. So demographics is the age range, right? Income level, profession, okay, or the geographic location. So it's going to give you statistical data about your potential investor, but it might not tell you much about their motivation. You compare that to psychographics, right, where it's going to give you information on personality, values, interests, lifestyle. It's going to dig a bit deeper into their preferences and motivation. Okay, so what are their hobbies? What are their investment goals? What's their risk profile? Okay, so what causes are important to them? So that's something that is really closer to getting someone to take an action and potentially partner with you on a deal, because it is a more of an emotional type of exercise. Okay. Here's a comparison, right? So this is looking at this guy here, Alan, right? So the demographics tell us that he's a male, 45 years old. He's not married. Okay. He lives in Maryland. He works in IT. All right. So that gives us a bit of a glimpse of kind of who he is, but not really his motivation. But then we also look here at Alan, right? And we see, okay, we dig a little deeper into the psychographics. He's a real estate investor. He loves dogs. Okay. Travels frequently. He has an entrepreneurial mindset. He drives luxury cars. Okay, so if that's someone that fits your brand, if you are also someone who likes luxury cars, if you're also someone who travels frequently, then Alan is much more likely to see himself in your story, and he's much more likely to be someone who would then partner with you on a deal, okay, or invest in a deal. Okay, so it's a much stronger driver. The way that we capture that is something that I call the IQI statement. And you can see it kind of summarizes here, but this is the blank version of it. It says that my ideal investor is blank years of age. They're single or married. They live in blank location. They earn a high six-figure salary as a blank profession in this industry. He or she is an avid blank, whatever their hobby is, who wants to invest primarily for whatever their reason, their main driver, their burning desire, and then they ultimately want to build wealth in order to achieve this specific outcome. So here's what it looks like when it's filled out. Okay. My ideal investor is 40 to 55 years of age. They're married. They live in Houston or Dallas-Fort Worth, Texas. They earn a high six-figure salary as a senior executive in the oil and gas industry. He is an avid car collector who wants to invest primarily for tax efficiency and ultimately wants to build wealth in order to achieve financial freedom and an early retirement. So once you have this statement, you have this profile that's built out, now you can start to build your content, your platform around attracting that person. Okay. And that's why it's so important, because if you try and put your message out and you want to speak to everyone and cast a wide net, there's a saying that when you try to speak to everyone, you're speaking with no one, right? And so that's what ends up happening. So your brand message should align with your target. Okay, that's the point behind this. And the goal is to invite them in the story behind your content. And you only do that by getting familiar with their psychographics. So doing a quick status check of where we are. Okay, provided clarity by explaining why it's better to attract capital than to chase it, right? I told you about the $16 million in 24 hours. Provided 5 reasons why real estate is an investment vehicle or an amazing investment vehicle for wealth, and gave an overview of apartment syndications. Also gave you the 3 keys, to getting clear on your IQI. Okay, so next what we're going to do is to dig into strategy. So we have the who, now we need to get into the how. How do you use social media to connect with these individuals? The 3 things you have to do, though, to become a capital magnet is build a network of investors who trust you, master the art of presenting your story, okay, and then nurture your network. So you're the common denominator in this, but it's always with respect to your investors or your IQI, your ideal qualified investor, okay? So I'm going to talk really quickly about the journey. All right, what you're really ultimately trying to achieve, because in reality, you really don't know where your investor is on their path. There might be someone who's brand new to this space, someone who's brand new to you. They've never seen your content. There might be someone who is who's not new to this space, but they're not clear on what their problem is, meaning they might have invested only in conventional equities, maybe the stock market, bond market, and that's it. But they're not getting the returns that they're looking for. And so they haven't really characterized the problem. Or they might be someone who's solution aware. So they know that they have that problem, but they're trying to find out exactly where they can get the returns that they seek. Or maybe they want a relationship with the person who stewards their capital. So they know they have a problem. They don't know what the solution is. And so what you're trying to do is to take them through this journey. Okay. And we're going to leverage social media to do that. Social media is not the only tool, but that's the one that we're going to talk about here today. But the first point I want to make is, where do you find investors? Okay. And there are 4 kind of key places where you can find them. One is networking events, right? So we're all familiar with those, in-person events, conferences, seminars, whatever they are. Sometimes they can be virtual if it's a virtual meetup or a virtual conference. But the upside here is that it builds trust quickly. If you're having a face-to-face with someone, you can shake their hand. They can see kind of what your energy like. You can see what their energy is like. So it's a way to build trust quickly. Okay. The downside is it usually takes time. Right. You usually have to pack a bag and fly somewhere to go and be there in person to get the most out of it. So it can take time. All right. Then there's referrals, which I believe is probably one of the most effective ways. Okay. But you typically are getting referrals when you already have someone who's invested in a deal. So the upside is they're much, much warmer leads. Okay. Because you're getting a referral from someone who is already very well familiar with your operation and with you as a person. But they tend to be low volume. You're not going to get a batch of referrals. You might get 1 or 2 here or there. And so they're much lower volume. Cold outreach is probably the most difficult. Okay. There are ways to target the person that you want to have a conversation with through advanced search filters and lists and these sorts of things. The upside is that you can target who it is you want to speak with. But the downside is you get a low response, okay, because they have not previously engaged with you and you're reaching out to engage. And so for some people, it can be viewed as intrusive. All right. So social media, right? You know, you have professional networking sites. You got LinkedIn, Facebook, Instagram, all of them, right? And you have media sharing platforms like YouTube. The pros in this, or the main pro, is that it is highly scalable. Okay. The downside is that it requires consistency. But the good thing is you can address the consistency issue in a way that I'm going to show you here in a moment. Okay. What I typically advise people to do is to structure their content in this way. To start off with a hook, because if someone's on Facebook or whatever, and you know, they're scrolling, then you need to give them a reason to stop. You have to have something that really captures their attention. So we start off with a hook. You dig into the problem that you are trying to solve in that specific post. Then you offer some solutions, and then after that, you have a call to action. The main thing to remember here, though, is that one post, one problem. Okay, so when you're trying to solve a specific problem, you need to have that one problem be the focus of your post. In other words, you're not trying to come up with a post that can solve all of the problems that your potential investor might have. You want to have one post that addresses one problem and moves the needle for them. Okay. I was having a conversation with my brother recently about the role that AI will have, you know, in business and everything going forward. And he shared this quote with me that I thought was very effective. You know, it's AI won't take your job, but someone using AI will. And so my advice is then to, you know, leverage the tools that we have available to us today so that you can get the most out of your time. You can maximize your time. So I'm going to share something with you. I did this using ChatGPT, but one thing is clear, right? The more specific your prompt, the more clearer you are in your inputs, the better output you're going to get. Okay. And this is important because for anyone who has actually spent the time to build out social media content, these things, you know that it takes a lot of time. You can leverage AI to cut down hours and hours of your time. So here's an example of a prompt. I'm going to burn through this really quickly. Okay. Right. But I'm planning so this is a prompt that I put in ChatGPT. I'm planning my social media content calendar for the week. As a capital raiser for multifamily syndication deals, I want to generate a variety of insightful and engaging posts on LinkedIn that will guide my ideal potential investors through a journey from being problem aware to solution aware, and ultimately ready to passively invest in my deals. My ideal investor is 35 to 55 years of age, earns a high income in the oil and gas industry, drives luxury cars, and loves dogs. Give me a table showing a week's worth of value-added content, including a few bullet points that will help me create each post. So very, very specific prompt, very clear input. This is what it generated for me. Okay. And so, you know, again, this is a great starting point because many of us, when we sit down and figure out what content can we put out that our investors will appreciate or our potential investors will appreciate, you know, you can sit down racking your brain to figure out exactly what you need to do. And the boost in efficiency and the reduction in time spent is well worth it. So this is what it's spat out. Now, I'm not trying to say that you need to have something every single day, okay? Because you can just change the prompt to say, I only want to post once a week, or I only want to post twice a week. But the bottom line here is you can see the value in being able to have something like this produced quickly. And then this is an example of one of the posts that it actually generated, okay? I fed it another prompt, and this is the post that it generated. And so it's, again, you know, when you're using AI to generate content, it really is a game changer because it significantly reduces your time. Okay, it's scalable. It helps you maintain a consistent message. There's even with ChatGPT, and it's not the only platform that does it, but they even have a bit of memory on each log. So whatever you put in as a previous prompt, it will remember it if you need to recall it. It saves time. It reduces burnout. Okay, so all these benefits. And again, this post right here is a very, very specific post addressing one single problem. Okay. So sounds awesome, right? But where does social media fit in the overall process of attracting capital? Okay. I'm going to share with you again. I believe that social media is very powerful because it is a one-to-many approach. And it's one to many, but with you know, where you've taken the steps to refine who it is you're going after. Okay, who it is you want to attract in your story and your brand. But it's not the only way to raise capital or attract capital. All right, so listen, you can tell I'm going pretty quickly through some of this material. So there are some slides where I'm going to advise you to take a screenshot. This is one of them, okay, because it's very busy. But it's a very necessary slide. The takeaway from this is that social media engagement plays a role in every single phase of the process. And if you look at the end there, there's one phase that kind of snuck on there that I'm going to talk about in a moment, that loyalty and advocacy phase. Okay, but take a snapshot of this, and you'll have a replay of the video, but please just take a snapshot so you can see kind of what is the appropriate type of content as you help your investors go through this journey. You don't know where they are in this. And so as an example, it would be inappropriate to schedule a phone call or to schedule a phone call with someone who's not really ready to take in your material, right? So you have to give them something, the right mode of communication at the right time. So I want to ask really quickly, if you could put this in the chat, is this helpful for you? Is this something that you could see yourself using to cut down on the amount of time that it takes you to build out a social media plan? Oh, you know what? Okay. I just noticed the chat is disabled. How about that? So hold on one second. All right. Is the chat disabled for see Thailand? Let's see. Chat. Is everyone else having that issue where you're unable to put a message in the chat? Wow. Okay, hold on. Panelists can chat. Okay. All right. It should be fixed now. Put if you don't mind, put something in the chat to let me know that it's there. We go. Perfect. Hey, Gabe, how you doing? All right. Thank you. My apologies. Thank you so much. Okay. All right, good. So okay, so is this helpful so far? Can you kind of see that the value in using AI to at least cut down on the amount of time that you would spend in building out your content plan? You're very welcome. Hey, Bernard, how's it going? Good. Kelsey, good. All right. Okay, good. So I'm gonna keep rolling here. So I'm not coming up on time. So okay, so where are we now, right? Let's do a quick status check. So I just outlined a strategy for you to kind of help boost investor engagement by providing an overview of the investor readiness journey. And we're going to come back to that in a moment. Presented a few key places to find your potential investor, your ideal qualified investor, and also outlined a framework for leveraging AI to structure impactful social media posts and to create a content plan using AI. Because you can, the slide that I showed, it had a week's worth of content. You can very easily extend that to say 30 days of content, okay, or more. So we have the who, we got the how, and now I'm going to go in for the difficult part, okay, because trying to instill confidence is not all that easy. I think the two main ways that you can get a boost of confidence is either through knowledge and real, kind of real world experience, or by having a clear guide, right? Some clear knowledge and information that someone offers you. So I'm going to make an attempt to do that. My goal is to boost your confidence and your ability to lead your ideal qualified investor through the investor readiness journey. Okay. And the main thing here is when you're building your content plan, you have to think about the type of content and engagement that you should provide your IQI at any phase of the journey. Okay. And so in order to do that, though, I think it's more effective to think about the questions that you need to ask yourself, depending on where they are. All right. So the three things we have to focus on, number one, is our ideal investor's mindset and emotional state as they progress through this journey. You also have to think about what your goal is and how you're going to close the gap, because there is sort of this inherent gap as the potential investor moves from phase to phase. There's always this little gap that they need to fill. So your goal is to fill that, okay? And so you have to think about how you're going to do that. And then lastly, what type of engagement and what type of content is appropriate for doing that, right? The graphic that I showed a moment ago, it kind of gave you a sense of what type of content you need to show and where. So these are the questions you have to ask yourself, right? What obstacles might my potential investor face, and how can I help them overcome them? What crucial information does my potential investor need, and how can I provide it to help advance them to the next phase? Okay, what approach will best support my potential investor in progressing confidently through their journey? Okay, and so so this is all very, very important here to keep track of. This is another slide that I would say take a screen capture of. Because I'm not going to go in depth in this yet, but I will say I hope that everyone here has already downloaded their workbook. If you have not, then there is a free PDF that's a fillable PDF that goes into more detail with this information here. So if you have not downloaded that, let me know. I'll put a link in the chat. In fact, I'll probably here. Let me do this and put this in here now. Okay, so that should take you to a fillable document that will go in more detail on this particular topic. But I'm going to keep rolling for a moment here. Okay, so this is another example of a prompt that will help you take your potential investor from being problem aware to being solution aware, right? You're trying to fill that gap. So here's an example of a prompt. I'm gonna read this quickly, but you would input, hey, create a succinct case study post showing the returns a passive investor will receive by investing $50,000 into a multifamily syndication deal with projected returns of 18% IRR, which is internal rate of return, and then a 2x equity multiple for a 5-year hold. Again, if you're not familiar with the metrics and the language, then we'll have another session on another day where we'll dig into what some of that means. But just kind of roll with me for a moment. Space the post out for ease of readability. Very important point, because if people see a post that's all bunched up, they're going to scroll right by it. Okay, they can't read it, or it's difficult to read. Use the following structure: the hook, the problem, the solution, the call to action, just like I laid out. Okay, and so again, we want to align the prompts with your investor's stage in the journey. So here's an example of what it returned. Okay, listen, if you have an investor who they struggle, understanding returns is a struggle for just about everybody until you've sat and understood it, and you sat in front of a spreadsheet and maybe broken it up, or if you've been before you've been in a deal before yourself. And so everyone has this gap, okay, at some point. And so if you can use AI to effectively come up with a way to help someone feel that, then why not do it? Okay, so and also remember that, right? One post, one problem. So you're trying to boost their confidence, their knowledge, in their ability to understand and to weigh the merits of these opportunities. So that's what this post does. This is an actual post that I could put on LinkedIn, and I can have the call to action to say, hey, comment below, or DM me if you want more details, and then I can have a conversation about it with you. Okay, so very, very usable post that came straight from ChatGPT. Now, the only thing that I warn is, you want to make sure that it matches your tone. So you don't want to just straight copy paste it, but you put in a good, clear prompt. You see what it puts out, and if it doesn't match your tone, or if it says something that you don't want, you just tweak it. But it's better than staring in front of the computer screen for hours trying to figure out what it is you want to say. All right, so what about loyalty and advocacy, right? That phase that keeps popping up on the end. Listen, this is the phase where satisfied investors reinvest and refer others to you. Okay, so it's driven by trust, it's driven by strong returns. And the challenge here is that there really is no substitute. Okay, there's no alternative for having that hands-on experience as a just general partner that can help someone get through that phase. And so that's why most of what I'm offering here today is really just to help you get through the initial engagement, or some tools to help you get through the initial engagement to being ready to invest. Okay, because that by the time your concern is loyalty and advocacy, you really kind of have a lot of the fundamentals down. All right, and so so this is a question for you guys now. Like, would you agree that not only does the kind of investor readiness journey concept help you connect, or would it help you connect with your IQI? And is it not easier to create scalable, right, value-added, targeted content when you have kind of this simple, clear framework for leveraging AI to create this content for you? Because for me, it takes a long time to really build it out, and I think that having something like this really helps you move the needle. So where are we? Quick status check. Okay, I think that so I offered a bit of clarity, strategy, and then helped kind of offer hopefully a boost in confidence by detailing 3 main drivers for your value-added content. Right, we had the graphic that shows the kind of questions that you need to be asking as you move your investor through it. Number 2, I offered a framework for leading your ideal investor from the initial meeting to being ready to engage and potentially invest with you. And then provided an example of using AI to shift the mindset of your investor, okay, through the 5 phases of the journey. So, we kind of covered the roadmap, the basis of what I wanted to cover here today. And again, zooming out a little bit to understand kind of why this matters, right? This clarity, strategy, confidence is important to use so that you can attract people, right, and capital into your brand narrative. Okay, and you do need to have a brand or a platform. All right, and then after that, you can close more deals. Right, you can make an impact on the things that are important to you, and ultimately make more money in this business. Okay, So what have I done on this webinar? So number one, I offered an investor engagement strategy that helped me attract 7 figures in private capital and helped me scale from 12 units to now over 2,900 units. I've also offered a framework for leveraging AI to develop value-added content for your ideal investor, which literally it slashes hours off of your planning and outreach work. Okay. And then also showed you kind of how to grow your network by identifying your ideal qualified investor. You have to do that because if you try to start off by just casting this wide net, then you're not going to have anyone in focus, and it's just very difficult to capture an audience that way. Okay, and also boost their investor knowledge and confidence, which builds trust. So I'm going to scroll through these. I think I put too many questions here, but here we go. Say yes in the chat if these things are true for you. Okay, so if this time hopefully was enjoyable and valuable, then put a yes in the chat. Also, if you feel like attracting the right people and capital is more effective than chasing capital and people, put yes. Okay, if you feel more comfortable in your ability to now leverage AI to create value-added content, lead your investor through the readiness journey. Okay. And if you have hopefully you've come up with some ideas that, that you're kind of thinking about that you can implement in your business. I think that's really the goal in this. So it's to show you some of the things that I use, but ultimately I want to really get the wheels turning so that as you're looking at this content and you're thinking through, okay, how can I use AI to potentially boost my network and help my business out? Okay. So the goal is to give you ultimately, an advantage over your competition. Now I'm going to share with you, I am an abundance. Okay, I have an abundance mindset. So I don't necessarily think that if someone else is successful, it makes me, somehow it limits my success. I don't believe that. Okay, but it still is important to make sure that you have something that adds, a bit of value to your platform. Okay. So, and I have really quickly before I get back into this, I have a question I wanted to address real quick. There we go. Okay, this is a good question, and I'm gonna get back to the topic here in a moment. But the question is, what's the best way to attract investors if you're not a social media person, and if you do not want to get on social media? Is it possible to still produce the same amount of attraction as social media? Okay, the second portion of that question is important because the question is around the same amount of attraction. So you can establish a strong attraction, but if it's around the quantity, then you might not be able to. But it still is very, very possible without using social media. Okay, you can most certainly have a very magnetizing platform and pull in exactly the people that you are looking for without doing this on social media. Okay, because ultimately a lot of this depends on kind of the face-to-face, conversations and really getting to know your investor. So you definitely can. I'll talk in a moment about strategies to attract your investor if you're not a social media person. But I would say that you at least want to have some presence, because even if you're going to need to have maybe a website or something like that. And I would say that if you're more in person type, then you maybe launch a local meetup or something like that, or attend a local meetup in your area. And that way you really start to build out some face-to-face time with the people who are in your market who might be interested in partnering with you. So that's the response that I would give to that. But I think that's a great question. All right. So, with the things that I've shared with you today, I think that, I feel pretty confident that you could probably take what we've covered and achieve similar results or some amazing results for yourself. Okay. I really do. I think that with the information in this webinar, your own resources and effort, I think you can succeed where a lot of people will fall short. Okay, because they maybe aren't using AI. A lot of people are scared of using AI to help themselves, which is interesting. But you have to use the tools and technologies that you have available to you today so that you can grow your business. And so if doing it alone was your only option, I do think it's still something that is worth doing. But what if there were another option, right? Okay, what if we were able to work together and go deeper than we can in one single webinar? Because I mentioned that, in this short amount of time, I'm going to try to jam a lot of value into it, but it's still just an hour. Okay, so what if I took an active role in your success and we shared in the outcome and in the result, of your work? Okay, and so I wonder how that would change things. So that's why I want to introduce to you the Capital Mastery Pro workshop. Okay, and the focus here is to share the exact tips and strategies that I use to attract over 7 figures in private capital. All right. It's a step-by-step approach to doing so. So it's the apartment acquisition process. It's analyzing profitable deals, and then of course attracting capital so that you can succeed. You can close more deals and make more money in this business. Okay, because there's a lot more to it than just trying to attract investors. I mean, that's a very small piece of this, and so it's important to kind of dig in and understand the rest of the picture. So this approach has helped me attract over $2 million and partner with my investors. Excuse me. And then one of my clients, his name is Chad Daksha. He's with DM Equities. He used this framework to attract $450,000 in one phone call, which was actually pretty amazing. But he's a sharp guy, and he pulled in over $2 million in soft commits in less than 6 months. Many experienced investors and new investors spend, a lot of money to attract a system that can help them, or to get access to a system that can help them attract capital and grow their portfolio. And we recently had a client that paid over $6,800 to learn the secrets of attracting capital step by step. Okay, but for anyone here that's attended this webinar, you can join us at the workshop, the Capital Mastery Pro workshop, for a one-time investment of $379. Okay, and all you have to do is go there to events.capitalmasterypro.com. I'm going to put that in the chat. Okay. The workbook, I just see a chat message. The workbook link did not upload. Let's see. Okay, here, in a moment here, I'll put, thanks for letting me know, Bernard. In a moment, I'll put the correct link in the chat. Okay, but so best of all, by signing up right away, okay, you'll get some extra special bonuses. And I built content, I don't know how many years now, to be honest. I've been building tools and calculators and different downloadables to where I just now have a wealth of information that's kind of stored up, and I want to give you a lot of it for bonuses because I think they're highly effective. Excuse me. Number one, earlier this year we did a Recon, which was a virtual conference where we covered a wide gamut of things that are important to this space. Okay, so we had input from fund managers, investors, deal makers. We have over 20 hours of exclusive content, interviews, and presentations, where the value of the people's portfolios in that group is well over $1 billion. Okay, the knowledge and experience these industry professionals share during this event will give you a competitive advantage over other investors in the marketplace. So you'll get access to all of those recordings. Number two, you'll get the AI automation toolkit. Okay. Like I mentioned, building rapport with investors through social media, email marketing, newsletters, which are some of the other strategies, and follow-up content is essential, but it does take a long time. Okay. And so what you want to do is to, where possible, leverage the tools that we have today. So you'll get over 20 AI prompts to automate your social media posts, over 20 prompts that are very clear and effective to automate your email marketing. Okay. And you'll get more prompts to automate your weekly and monthly investor newsletters. Anyone who's done this stuff, that it takes a long time. When you sit down and figure it out, you'll get prompts that will help you do all that in minutes. Okay. And then lastly, you'll get apartment deal pitch decks. Okay. So attracting capital is more than just having amazing content and a thought leadership platform. You also have to craft a powerful, compelling deal deck. Okay. Because I've seen some deals come through that are presented to a potential investor, and because the presentation is not all that clear, then they lose the opportunity, okay, or they miss out on raising capital or attracting capital. And so I want to give you access to pitch deck templates that were used to acquire a $40 million apartment deal, and you'll get access to one-pager templates that you can use for investors who kind of want just a snapshot of the deal that you're providing. Okay, so very, very useful stuff. I don't want to go through this whole slide, but I'll tell you, Provestor, because I mentioned that you'll have access to Recon. Charlie Hardage and I, who's my partner, we launched this platform called Provestor, where the goal is to help investors close their first commercial real estate deal. But this is also for more experienced investors. Okay, and so there's just a ton of things that you get, a ton of benefits that you get from it. I mentioned all the content, accelerated growth, right? Hands-on training. So there's just all these things that you get. And this is you'll get access to this stuff, and this is outside of the workshop. So the workshop itself is to help you understand deal analysis, attracting capital, and the apartment acquisition process. All of these things are just bonuses to help you get there faster. Okay. And the goal of ProVestor is to have community coaching and content. So those are the three things that we focus on in that on the platform. It's a place to pull you away from some of the distraction and the noise that you get when you are in other spaces, and to put you in an environment where you're around serious professionals, experts and investors who have had real results in this business. And so I'll put this. I'll email this back out to you, but this is a link to a Google form that you can fill out in order to get access to a sheet. And if you put your information in there, then I'll go ahead and get you access to ProVestor. Okay, so as a part of this package. Okay, now I'm going to slow down for a minute because I feel like I've been talking just a mile a minute, which is not normal for me. It's kind of my throat's getting dry. Listen, I'll tell you that the goal behind all of this is really so that you can get freedom, right? Freedom, time freedom, location freedom, financial freedom. And it's important because you can spend time doing the things that you want with the people that you want. Okay, the things that are important to you, the goals, the values, the causes that are important to you. Okay. All of these things are kind of just a tool, a vehicle to help you get there. And I believe firmly that you can design your life. And I think this is a great way to do it. Okay. Investing in these assets that have all of these, I mentioned the ideal acronym. So it has all these things that are beneficial to you, is so important, because once you see it, you can't unsee it. But once you get to the other side and you are in a deal, or you've partnered with someone who has had success in these deals, it really opens your eyes to something that is amazing. Okay, I can't say it enough, because like I mentioned in the beginning of the presentation, that when I got laid off, I felt pretty down. But I had a conversation with my father, and he said, well, hold on just a minute, Brandon, take a look at the income and the distributions from your passive investments and from the properties that you own, and take a look and let me know what it amounts to. And they literally added up to a salary. Okay, so again, it's very important, I think, to focus on leveraging the best tools that you have, meeting with the people who are where you want to go, but leveraging the best tools that you have so that you can design your life. Okay, and so that you can attract wealth into your life. So I hope this was very, very helpful. And again, the site, I have the QR code for it here, but it's events.capitalmasterypro.com. And go ahead and check that out. And I'm looking forward to having this seminar. It's going to be very, very in-depth. And so I'm excited to share that information with you. And I certainly hope to see you there. So I want to be respectful of your time, but I do want to open the floor to just a few more questions if anyone has any. And so I'll just give a couple moments here. And let me put the correct link actually in here first to the workbook. So if you have any questions, go ahead and put them in the chat or in the Q&A, the Q&A box, and then I'll go ahead and respond to you here. Okay, so we have a question. What would be your best strategy for an in-person networking event where the time is limited to find out demographics, psychographics, et cetera? So I think this is a good question. I think that if the time is limited, then you might save some of those things. Well, here, you might save some of those things for after the event. Okay, but this is where your pitch statement comes into play. And that's something that I don't think I addressed in this particular talk. But what's important is that when you meet someone, if you're at an event and you meet someone, you have to have, it doesn't have to be silly or come off as, as being forced, but there is a way to, and I actually have a guide that will help you piece this together. But there is a way to introduce yourself with a one-liner that makes it clear to them whether or not you can help them. Okay, and so by doing that, you're sort of filtering to you're not really gathering psychographic information yet, but you're putting your value proposition out there in a one-liner, because they're going to inevitably ask, what do you do? And so when they ask that, that's when you offer this one-liner. And if they are someone who you could potentially help, then it will come out in the conversation. But in terms of actually sort of gathering psychographic information from someone at an event in person, you might only get one thing or two, right? You might only be able to get that they like luxury cars or something like that during the conversation. So you're not really trying to gather a catalog at that point of psychographic data on that person, but you might get one or two things that you can really use to kind of segue into a follow-on conversation or follow-up phone call or whatever it is after the event. So I hope that answers the question. All right. Okay. Well, thank you all so much, and I hope you enjoy the rest of your day. Let's get it. Let's grow. I love it. You're very, very welcome, and you're looking forward to continuing to grow with you all. Okay. Again, we can do this. You can design your life, and let's get it done. Okay. All right. You guys take care. Thank you.